Japan has just made one of the biggest crypto decisions of 2026. The Japanese House of Councilors has passed a revised Financial Instruments and Exchange Act that could completely reshape crypto investing in the country. The new law introduces a 20% flat tax on crypto gains and opens the door for crypto ETFs, including Bitcoin ETFs. Could this trigger the next wave of institutional adoption? Let's break it down. What happened? Japan's House of Councilors officially approved amendments to the Financial Instruments and Exchange Act. This is a major step because crypto assets will now be regulated similarly to traditional financial products. Two major changes stand out. Crypto profits will be taxed at 20%. Crypto ETFs will become legal. This is one of the biggest regulatory victories for the crypto industry this year. Why is the 20% tax important? Previously, crypto investors in Japan could face much higher tax rates depending on their income, sometimes exceeding 50%. That discouraged many investors from trading or holding crypto. Now, a flat 20% tax makes crypto investing much more attractive. It creates a level playing field between crypto and stocks. This change could encourage more retail investors to enter the market. Bitcoin ETFs are finally coming. Perhaps the biggest headline is that Japan will allow crypto ETFs. Bitcoin ETFs have already transformed markets in the United States by attracting billions of dollars from institutional investors. Now Japan is preparing to follow a similar path. With ETFs, banks can offer crypto exposure, pension funds can invest more easily. Traditional investors don't need to manage private wallets. Institutional demand could increase significantly. Why this matters globally? Japan has always been one of the world's most crypto-friendly countries. When a major economy strengthens crypto regulations instead of banning the industry, it sends a positive message worldwide. This could encourage other Asian countries to modernize their own crypto laws. Countries like South Korea, Singapore, and Hong Kong are already competing to become digital asset hubs. Japan's latest move adds even more momentum. Impact on Bitcoin. Bitcoin could benefit from several factors. Increased institutional demand, more retail participation, greater market confidence, easier investment through ETFs. Although regulations alone don't guarantee price increases, they often improve long-term adoption. Impact on altcoins. This isn't just good news for Bitcoin. Ethereum and many other cryptocurrencies may also benefit. If crypto ETFs eventually expand beyond Bitcoin, Ethereum ETFs and diversified crypto funds could attract even more capital. Projects with strong fundamentals may see greater institutional interest. Institutional adoption is accelerating. The crypto market has been changing rapidly in 2026. Governments are creating clearer regulations. Banks are entering digital assets. Major investment firms continue expanding crypto services. Japan's latest decision fits perfectly into this larger trend. Instead of fighting crypto, governments are increasingly integrating it into traditional finance. Risks still remain. Investors should remember that regulations don't eliminate market volatility. Prices can still fluctuate significantly. Global economic conditions, interest rates, inflation data, and geopolitical events will continue influencing crypto markets. Good regulation is positive, but responsible investing remains essential. Final thoughts. Japan has just taken a historic step for digital assets. A lower 20% tax and approval of crypto ETFs could make Japan one of the world's leading crypto markets once again. Many analysts believe this is another sign that crypto is becoming a permanent part of the global financial system. The next few months could be very important as investors watch how quickly ETFs launch and how institutions respond. Call to action. If you enjoyed this update, don't forget to like, subscribe, and turn on notifications for Japanverse so you never miss the latest crypto news, Bitcoin analysis, AI updates, and global blockchain developments. Thanks for watching.